We often see in low-income countries, just like in high-income countries, that the government will grant lower rates of VAT on goods and services that take up a larger proportion of the budgets of poorer households. So for instance, food is often subject to a lower rate of tax than other goods and services in the economy. So in this research, we consider how well targeted these reduced rates of VAT are in terms of supporting the welfare of poorer households in 4 low and middle income countries: Ethiopia, Ghana, Senegal and Zambia. And then we compare the redistributive power of these reduced rates of VAT to existing cash transfer schemes in these countries and a hypothetical universal basic income, that is, a uniform payment to everybody in the population. So our main finding is that preferential rates of VAT in these countries are not very effective at targeting poorer households. This is partly because of the fact that poorer households in these countries obtain relatively more of their total consumption from sources such as farm production, which don't directly benefit from VAT exemptions and reduced rates. But more importantly, this reflects the fact that richer households just spend more in general, and thus the cash subsidy that they obtain from these preferential rates of VAT is much larger than for poorer households. We then find in a policy simulation where we reduce the number of preferential rates in the economy and use the additional revenue this would generate to fund a universal basic income, that there would be net gains for poorer households and big reductions in both extreme poverty and inequality in the countries that we study. So our key takeaway from this research is that if governments in low and middle income countries are using preferential VAT rates as a redistributive tool, they're probably not doing as well as they could be, and they'd be better off raising those VAT rates, obtaining extra tax revenue and using that to fund social programs. While this result is striking, there are other considerations for this policy issue. For instance, perhaps the presence of large informal markets means that different VAT rates are justified on the basis of their impact on formality in developing countries. In future work, we'll consider both this issue and the robustness of our initial results in a wider set of countries.